Hey guys, it's Downtown Josh Brown. I'm here with Michael Batnick. We're here to play yet another edition of What Are Your Thoughts? Michael doesn't know what I'm going to ask him about, and I don't know what's on his mind, so we're going to find out together. Stick around. Let's have some fun. All right, Mike, I want to start with Nick Majuli's post. Follower is not a follower. He's basically like saying... First of all, I don't know how he got to 60,000 Twitter followers. It's pretty impressive. But he's saying it's like, you don't get that much from it. Like people, no matter how many thousands of followers you have, it's really the same amount of people clicking on your content or retweeting your links. Do you see it that way?
I found that hard to believe that he showed a blog post that somebody with 100,000 followers retweeted or linked to, and the spike was barely visible. So I wonder, I mean, I'm not questioning his data. But fine, that aside, I see the main point. Like you have your readers, and whether you're 10,000 followers or 50,000 followers, that doesn't necessarily translate to a bigger audience. It translates to a bigger Twitter audience, but it doesn't translate to more actual fans.
The way it was explained to me is that followers is like a vanity metric. And it's useful for, let's say, getting yourself booked on CNN or something like that. But engagement is like your real followership, and even like the engagement on your tweets or how many people actually subscribe to your blog or or how many listens on your podcast. That stuff you can't fake engagement. So you could buy followers. You can't really convince people to actually click on something you've written and read the entire thing. Like that's real engagement, and it's much harder to fake, but people pay much less attention to it because it's not boiled down to a number that's public, right?
I wonder if the advertisers and stuff are getting wise to that number. Like followers used to be, or probably still is, currency, but maybe it's just currency for your ego more than like actual dollars.
Advertisers, it's no different than the web where somebody would be like, oh, I have 1 million page views today on this article. Really, how many people read to the bottom? How many people take action on a hyperlink that's buried in between two paragraphs? Like how many of these people are like reading it intently enough to actually see an ad? That's a whole different metric.
Well, I think the gist of the article was cut the bullshit. Not everybody can have a side hustle. There are not 4 steps you need to take, with the 5th one being bro down. Like it's just this notion of all these VCs on Twitter telling everybody what they need to do with their lives to improve their situation is just tired and it's just nonsensical.
I think my big takeaway from what he was saying was that if you do something good, it's going to get read. And it has nothing to do with if you have 30,000 followers or 60,000 followers. If you do something if you phone it in, like if you put up a post that it's apparent that you didn't put a lot of effort into, people just they're just not going to click it. It doesn't matter how many followers you have.
So like Al Tucher's post last week, which was just flawless, perfect, got like a bazillion views because it was such high quality. Is that what you're saying?
Yes, that's exactly what I'm saying. That's exactly what I'm saying. All right, what do you got?
All right, so I am a fan and a follower of Corey Hofstein's. He has season 3 Flirting with Models podcast, and the last episode was with Cliff Asness, and it was really great because Cliff has been on a million podcast stages, and you've seen it's the same questions over and over. But Corey really went deep.
Well, what do they always ask? What do they always ask Cliff? What's the same question that he always has to answer?
Talk about the quant quake, your start of the business, is value dead, just the same stuff.
06.
Just the same stuff.
Yeah, okay.
So anyhow, one of the things that Cliff said was being right and surviving are not always the same thing. And I thought about like John Paulson, for example. He shut down his gold fund like probably, I'm guessing, I've lost track of time. Is it a year ago? Maybe not even. Like right before this epic gold run. And so he couldn't survive. He was right. Eventually, he couldn't survive. So this is something that investors battle with all the time is I'm not wrong, I'm early. How, if you are so sure that you're right, but the market is telling you you're wrong, how do you survive?
You survive by becoming a family office. I'm not even joking. Why the
Stop it.
Why the
Stop it.
Hold on.
Retail. Stop with the F-bombs.
Two things. Why would you become a billionaire hedge fund manager only to keep on answering to people? Like, if your game is long term, you want to beat the market, and you know that in a lifetime, there's probably only 2 or 3, if you're lucky, extraordinary opportunities, and that's capitalize them, you're probably going to have to look wrong for a while before they actually pay off. And that's just the nature of the beast. Then, like, I just never understood this. Why not just go do that? And a lot of them have.
Forget about Paulson. I'm talking about people watching this. What could they do? How could they survive?
People watching this, if they're managing other people's money or if they're managing their own.
Or their own.
Oh, just shut your mouth. If you have conviction, then don't back yourself into a corner publicly about what you're like. Don't pound on the table and try to get other people to listen to you. The number one thing that I have learned by being hardcore in the public eye with investment opinions is you can't care how many other people agree or disagree with you. You can't. You cannot get triggered by other people having the opposite point of view in investing. Because guess what? There's only one referee. The referee is time. And so it doesn't matter if you're right and I'm wrong. Time is going to decide what the truth is. And so how do you survive? Well, number one, shut up and stop fighting with people. And if someone disagrees with you, say, okay, you might end up being right. That's okay. I'm not mad about it. I don't care that I'm a bull and you're a bear. Who gives a shit? That's how you do it. No?
Yeah, I mean, I would say that is very good advice.
Use technical analysis.
Don't talk to friends and family about what stocks you're buying because that just adds unneeded.
You can talk about it.
Pressure.
Don't fall in love with your own opinions, because especially publicly, because then
but that's not practical.
You can't change them.
People fall in love with their own ideas. So what I think you can do is just position sizing. Don't put yourself in a position where something has to work or you're effed.
I'm taking my second technology L in the last year. First was Twitter, which I was invested for 7 years.
Did you sell near the bottom?
Honestly, I think I made a few $100s between no, I averaged down, whatever, but I think I got out of it like break even. Any other tech stock I would have bought, I would have probably made 4x on that dollar. So I just did that with Slack. I'm walking away with like a buck or two in gains after holding it from the IPO, defending it, arguing with people about Microsoft. It's such a waste of energy. I was wrong. That's it. I could have bought almost any other software company and had 100% gain since March. Instead, I held on to this and it's flat, and I'm wrong. And
all right.
Arguing with people publicly about it only makes it worse because you don't want to back down. It's not even about money. It becomes about it's about ego. It's toxic. Can't do it. All right, this is what I want to ask you. Speaking of, I put on like a vaccine YOLO trade a little bit. I wouldn't recommend this to anyone else. I bought Simon Property Group. Talk me out of it.
Looks okay. I mean, do you have a stop in, or are you just...
You have it up in front of you?
Where are you out?
I think probably $60 looks like it's been support. And
yes.
And I would basically say the market has completely thrown in the towel on this name if it breaks below 60. That's like...
Yeah.
So, all right. So talk me out of it,
and you're getting paid. You're getting paid to wait.
Well, that's
dividend yield of 7.5%.
I think the dividend yield is solid. I think it's solid.
I'm not gonna talk you out of it. The chart looks good. Let me ask you another question. If it works, what's your out on the upside?
Maybe never.
Where are you taking profits?
It's a REIT. I'll just hold it for the distribution. I own it in a tax-free account. I acknowledge that this company had problems before COVID, but this was $230 in 2019.
So you're trying to get married?
No.
You're trying to get married to the stock?
No, but I could potentially fall in love. I'm not in love with it now. My stop is less than 10% away, I told you. But I would just say, clearly the malls are challenged, but not the A malls. And I know this isn't due diligence, but every time I drive past the Meadowbrook entrance for Roosevelt Field, there's a line of people backed up to get in there, and there's no construction. That's like pure people returning to the mall. I know anyone can make that observation.
Forget about fundamentals. I think so. You're swiping left or right. I don't know what the kids do these days, but I wouldn't get hitched. I would take profits at 80 if it gets there. Just me.
All right. What's the significance of 80?
I don't know. Just why not?
Now,
gotta have something in mind.
Now, is a vaccine a week before the election approved, not distributed? Just the FDA 5 days before the election, with Trump holding a gun on the guy's head, says we're approving the Pfizer BioNTech, or whichever one gets there
the plasma.
First. No, that's a treatment. Vaccine. We get a vaccine FDA approval. What does this stock do? It was 230. It's got
100. By the way, this is not a YOLO trade. The YOLO trade would have been weekly calls, sir.
Yeah, no, I don't. It's a YOLO trade for me because I very rarely will like be in something that I don't like long term, just because I think what could happen short term. All right, we'll see what happens. I'm sure I'll get buried.
Was that a generational buying opportunity? So let me give you the numbers. The S&P 500 would have to fall 36% to get to the March lows. The NASDAQ 100 would have to fall 42%. Are we ever going to see those numbers ever again? By the way, it certainly didn't feel like a generational buying opportunity at the time. Let's get that out of the way, stating the obvious. Are we ever going to see those levels ever again?
I read somewhere that the NASDAQ is up every year except for 2 over the last 25 years. Is that true? Does that sound like a thing that could be true?
25 years?
Yeah.
So 2000, 2001, and 2002, no? It was down in 02?
I think it bottomed in October of 02. It might have been up on the year.
I know. Okay.
But 08, it definitely went down.
08. I think it was down once in the last few years. 18. Anyway, whatever. It's had a sick run, obviously.
It's almost like Australia never having a recession for 30 years. I think they had one this year. It's an unbelievable record. So I don't know. I do think it's a generational bottom because it just seems to me that even if we have a resurgence this fall, we're not going to have like a crash. I do think there'll be very severe correction, but I think some stocks will be treated differently than others. In that moment, everything went down. And that's a really hard situation to perpetuate for long. You very rarely have market events where everything just goes down indiscriminately that much. Like 30% in a waterfall like that is going to be tough, especially now that people have learned to differentiate the impact of the health crisis on different types of companies. I don't know. Do you see it that way?
Well, I think that even if we do get a second wave, the reaction is not going to be as severe to the downside as it was the first time because we've been there.
Okay, so we're on the same page on that. All right, so I listened to you and Ben talk about his concept that I guess he wrote this for Fortune or for Bloomberg, that crashes and recoveries are going to be faster in the future, and that we need to detach ourselves from.
I'm a seller.
This notion that bear
idea.
Markets have to go on for years. You don't think that's reasonable?
No.
The data is against you, though.
Recent data, yeah.
Well, I mean, why wouldn't we rate recent data more highly? Why wouldn't we look at recent data as an exponential moving average? So take the last 10 bear markets, and they seem to be shortening in length, not severity, in length of time. We are processing the business cycle faster. A lot of that is because the Fed has become more activist. These are undeniable things. Why would a bear market in the future take longer for the public to react to, both negatively and then positively?
I just don't think that bear markets are going to be measured in days and months forever. I think it might change a while. It might take a while for that to change. But this idea that you don't think that we could have a 30% decline and then not hit new highs for 7 or 8 years? Do you think that's
No. I do, but you're still not technically in that bear market, are you? If you recover somewhat, you're saying a 30% decline and then stay down?
No, we could recover half of it. I'm just saying, like, I just think that that's like the stability leads to instability argument. I don't think that's a permanent feature. I don't buy that for a second.
I concede that there's no reason we couldn't have a 5 year period of no returns whatsoever. That's happened within my career. I've seen that already. So
what exactly are you saying? So what are you saying?
I think the recession part of it, I think the Fed reacts quicker and more boldly. And every time the powers that be react to a recession or a market crash or whatever, they seem to be doing it bigger, better, faster, and with more determination. And that makes sense. It's because they're learning what tools do what. Shouldn't they get better at responding to recession? So I think
They have. It's undeniable.
Yeah, so I don't think we need to go through 7-year depressions anymore. I think we just have to have regular bear markets, regular recessions. But I think investors have become more conditioned to see the other side of them. So what ends up happening is they end up buying stocks sooner than they would in a normal recession, especially given we now have this caste system where people in the top 10% are barely even affected by recessions. And so they're the ones doing the buying of the stocks. So they're the ones telling their financial advisor, yeah, I get it, everything's going to suck. They shut down the economy. Buy some Disney anyway, because I think 2 years from now I'm going to take my family there and everything will be okay. That's not regular people doing that.
But until we get a 20% and bounce and then don't make new highs and then we fall again, like it takes a while for that psychology to change. So yeah, right now they've been conditioned to buy every dip. I don't think that's permanent though.
So this is more than a dip though, Mike. This is a crash. And we have data from Vanguard saying that people didn't even budge.
At Vanguard, they're well-behaved investors.
So they're not a good example of every investor. But look what the other type of investor did. They threw themselves whole hog into day trading on the backside of a 30%, 16-day, 30% bear market. You know what the general public did? They didn't say, oh, stocks are for assholes, I'm out. They said, I want more in than I've been for 12 years. They funded day trading accounts, and they just went absolutely hog wild. And it's not just kids. I know grown-ass men doing this shit all day long now on their phones trading. So I do think the investor mentality is bring on the recession. I can't wait to trade it.
Right now, that's not permanent. That's all I'm saying. I agree with you. Right now, that's what it is, obviously. Okay. All right. Yesterday, I wrote a post called King Apple, and the distance between the biggest stock in the S&P 500, which is Apple, and the second biggest stock, which is Amazon or Microsoft, is now 30%. So Apple is 30% bigger than Amazon. That spread, I almost feel like my data is wrong because it's so on the button. That spread has gotten to 30% where it is today, 3 previous times, and every other time that came down sharply.
How did it come down? The second stock catching up or Apple catching down?
So I only looked at Apple. One time Apple came down hard. It fell 35%. The other 2 times didn't mean anything. So I don't think that this necessarily means anything for Apple. But if you just look at like so this is a crazy stat. So since over the last 56 sessions, Apple has added $760 billion in market cap in 56 sessions. Now, granted, it's from the lows, and I'm going to cherry pick another data point. But in January 2019, which is not that long ago, Apple's market cap was $700 billion. So it added more in market cap, and I'm having fun with data. It added more in market cap over the last 56 days than it did for its entire value in 2019.
That's extraordinary. And I guess the question becomes, where did that money come? Where did the $760 billion incremental dollars now comprising Apple's market cap?
I'll tell you.
It came from Berkshire Hathaway.
Multiple expansion. So the PE ratio forward and backwards is going vertical. So now it's 38 times trailing 12.
Yeah.
And
what was it at the time? 15?
I'm just eyeballing it. The last few years, it traded at as low as around 10 or 12, and as high as 20.
Yeah, when it was 12 times earnings, and you backed out the cash on its balance sheet, which was much less than it is now, but still a lot. I think it was like in real life, like 8 times earnings.
By the way, I feel like that argument was like in 2013, and people were like, "Yeah, back out the cash, back out the cash. Yeah, it's not
LOL.
cheap."
Well, who's laughing now?
Right.
That's when like David Einhorn was buying it, and he's just like, I don't understand. This company's 8 times earnings, and every one of you has an iPhone in your pocket. What's wrong? Well, we found out what was wrong. People had to wake up.
37 times earnings.
Yeah. I sold 20% of my Apple and 20% of my Nvidia, and I didn't do it as a call on the price of either stock. They just had gone up so much that they became huge parts of my IRA. Like first of all, I'm hugely exposed to Apple through the firm, through my retirement account, through every index fund I own. So it's not like I'm really walking away from Apple, but I have like single position in Apple and Nvidia. Nvidia's up, I don't know, 700% in the last 5 years. Apple's up 400% in the last 3 years. And they ballooned relative to every other individual stock I own. So I had to sell a fifth of both. And I almost felt nauseous selling it. They were both breaking above 500 on the same day, 500 per share. It's really an extraordinary thing to watch. Where's Microsoft relative to Amazon? Are they neck and neck?
In terms of what?
Market cap.
Amazon and Microsoft are both 1.6.
Okay.
Amazon's 165, Microsoft's 162. So they're the same
They
size.
could change places in one day. Yeah, listen, it's an extraordinary
But
time.
if you look at this chart, the distance between the biggest and the second biggest has been really tight going back to 2019. Like the leaders have been neck and neck, and Apple just took off.
Yeah, I guess what do you do about this? You're not going to short one by the other because you don't know because you don't know that the number two is going to stay number two. In the case of Amazon, I think it's likely that it could, but you don't know. By the way, Google and Apple were fighting for the top spot as recently as 16 and 17, and Google's almost not even in the conversation anymore. It just quietly makes a fortune every quarter, but it doesn't seem to be in the conversation.
Google's not even 1.1 trillion.
Yeah, it's just not. They don't even talk about it anymore. It's just this tiny $1 trillion market cap. All right, let us know what you guys think. We love your feedback. We love when you jump in the mix. Go ahead and leave us a comment. Leave us a like. We love the likes. Subscribe to the channel if you have not already. Michael and I will be back next Tuesday.